Hey guys, what is up, and I welcome each and every one of you to a new Tesla update video. So today we're going to be doing the video a little bit earlier than usual. The market closes in about half an hour, but the reason, of course, is because, well, Tesla's earnings, of course, come out today. We have the earnings call at 5, I think it's 5:30 Eastern. But the more important, well, not more important, but one of the important things is the actual earnings themselves, like the numbers and everything, come out at about 5 or 10 minutes roughly after market close. And I obviously want to be paying attention to that. So I'm doing this video a little bit early so that I can, of course, check those out as they come out, because that is, of course, exciting, right? So anyway, all that being said and done, let's just jump into it. If you enjoyed, don't forget to hit that like button, guys, as per usual. And of course, none of this is financial advice. Make your own decisions, do your own research. I'm not a financial advisor, but jumping into a Tesla as of right now, still again, half an hour left, but sitting around $145 per share. Wouldn't be surprised if it closes maybe at like 144, between 144 to 145. That wouldn't surprise me whatsoever, which will pretty much put Tesla about flat for the day. More or less, right? Nothing too absolutely, actually probably maybe up slightly, actually flat to slightly up is my guess right now. It'll close at, which, yeah, is not too shabby whatsoever. So let's just jump into it and let's see if we can discuss and dissect this move and what we can expect moving forward. So if Tesla does close somewhere around this general level, it will have a hammer candle like this. Now, a lot of people, not a lot of people, but some people view it. So okay, when you have these kind of hammer candles like this down here, so for instance, we had a weekly hammer candle right here, right? So this red one right here at the bottom. Again, hammer candles are usually reversal indicators, and I personally view them as bullish reversal indicators. However, with that being said, some people view hammer candles as just a reversal indicator, period. In this case, even if it was all the way up here, they would still view it as a reversal candle. I personally put a lot less weight into it than a lot of others do. So, but I thought I would mention it just in case, just as kind of food for thought. Now, the volume today, again, still about half an hour left, but, pretty, okay volume, not too low, but not too high, more or less, I would say roughly in line, right? But on a, slightly green day, arguably closing potentially above any of these levels that we could have or were able to close out the previous 2 days, especially on earnings. Now, the thing to keep in mind, though, ladies and gentlemen, is that earnings run-ups are usually extremely suspicious. The fact that we ran up into earnings like this, and again, we're very close to 150. So we are pretty much about 42% from the lows in about 2.5 weeks to maybe even 3 weeks, which is extremely, that's a damn good run, if I do say so myself, right? Obviously after a massive fall, but nonetheless, still a fantastic run. So just from the fact that we're running into earnings is suspicious to me, right? But again, it does not mean that we can't run up a little bit more even after earnings. So for instance, tomorrow, that is not impossible. But again, I personally view this as a much less risk versus reward opportunity for the bulls than I do for the bears, I guess, in this case, right? So again, we have the 50-day moving average right above us, sitting at 152.36 right now. Of course, it'll come down a little bit, but pretty much sitting just above 150, let's just say, right? We have the Bollinger Band that we're pretty much just hugging the green line, which again, usually when you hug these lines, it doesn't last for too long. Usually ends up bouncing from it soon. Not always. Again, we've had times where we hug the red line a pretty crazy amount like this. This is pretty unusual, though. This doesn't usually happen, but this was pretty aggressive, right? So this can happen on the flip side to the upside as well. It's not impossible. I just don't think it will. Now, on top of that, we are still above the 5 and the 10. So ultimately, Tesla still isn't. I want to make it very clear. Tesla isn't showing any obvious reversal signs or top signs just yet, right? It is getting some, decent rejection around these, mid to high 140s area, of course, which is, I guess, a sign, but it's not like a major sign. It's nothing completely just screaming at me right now saying that this is the top, it's over, it's time to, crash. Nothing is really saying that just yet, but of course, that is subject to change, right? Of course, 150 being a massive signal or area and just psychological area, also a massive resistance area. So, it'll be hard to pass through that. We're, of course, also in this little rising wedge, as you can see here, right? So naturally, this also is going to be a situation where, as you kind of, zigzag up into it like this, again, more often than not, you fall to the bottom out of these, right? That is extremely common. So again, personally, whether we just straight from here after earnings just fall, or we rally up and then fall, I personally think both of these, it doesn't matter which one we take. I think the result or the end result will be the same, that we will fall to the south from this ascending wedge. Again, that is just my opinion. Could be wrong, right? Of course, time will, of course, tell as per usual. So we definitely we got to see it play out. But again, I do want to make it clear, as of right now, there isn't anything really showing that Tesla is showing top signs. It doesn't look toppy or extremely bearish just yet, right? There's nothing super obvious like that. So, you know, this is me more of just predicting into the future. Now, again, another thing to keep in mind is the fact that, you know, if you take the Fibonacci from the arguable swing high to the arguable swing low, we have the 0.5 sitting pretty much dead on at 150. Yet another reason why, you know, this is a major reversal area, which, you know, can potentially bring us down substantially lower. However, on the flip side, for the bulls, again, regardless of the path we take, I still think there is going to be a rejection very soon, regardless if it's 150 or maybe even as high as 162. However, for the bulls, if the bulls want to see like a pretty bullish situation, rallying up to somehow 162 and then getting rejected from there and then making our way down is actually a bullish thing, mainly because if we happen to have a move up all the way to the 162 Fibonacci, which essentially puts us at just above 160, that is pretty bullish because that shows that the strength in Tesla is actually starting to really come back into the bullish territory, and that will actually be a pretty bullish run up. And then the drawdown will be a lot less of a drawdown compared to if we only get rejected at the 0.5, let's say, right? So if we get rejected at the 0.5, let me just draw this one more time. That means that the drawdown or like the rejection will be arguably or potentially harsher. So for instance, if we come up to this 0.5, which is the 150, the rejection could be a lot stronger. We come down all the way to like the low hundreds easily. However, if we happen to somehow rally all the way up to the 160, just over 160, the rejection should be less severe, in my opinion. Of course, that's just kind of how I see it as of right now. So we'll see how far the earnings actually puts us, right? And again, with earnings, it's a very tough one because you never really know where it'll take you, because it's just such a, I guess, almost like an anomaly, if you will. So, you know, we'll see where that takes us. But again, the main thing I do like is the fact that we did break out of the downtrend. Tesla is arguably breaking, you know, a pretty decent downtrend as of right now. So that's not bad at all. But again, the main thing I'm personally waiting for is, of course, this play out of this ascending wedge to the downside. And then we'll see where that ultimately takes us. The RSI on the daily, not too shabby, nothing too, you know, bearish looking just yet. The 4 hour, the 3 hour, even the 2 hour, you know, nothing completely super duper bearish. The 2 hour is where things get a little bit more bearish slowly, and especially the 1 hour, mainly because you can see an obvious bearish divergence where as the stock is essentially making its way from here, you know, kind of going a little bit even higher, arguably, right? You get candles closing at higher levels. It's obviously making a bearish divergence because the stock is technically going to the top right, while the RSI is, of course, going to the bottom right, which is a bearish divergence in this case that is slowly being formed. Now, this doesn't mean that it has to crash right here, right now, but to me, what this tells me is that the upside, the move to the upside is much more limited than it is to the downside. That is what this bearish divergence as of right now is telling me. It's a lot more obvious on like the 30-minute, you can see, right, where it makes it even more obvious, where, you know, we came up all the way to the extremely overbought territory, sitting at almost 90 back when Tesla was rallying up to over here at 145. We rallied even higher and closed a 30-minute candle at 146, which is, of course, higher. However, you can see the RSI very obviously lower, right, substantially lower than, you know, the peak on the stock versus the peak on the RSI, like a pretty obvious bearish divergence there, if I do say so myself, where you can see it going, oops, let me not do that, actually, go like this, broski, there we go, right, where, you know, it's very obviously going up, while this is very obviously going down. Just, you know, food for thought. This tells me that short-term Tesla is definitely reaching some pretty massive areas of rejection, and that, you know, it should see a drawdown relatively soon. Doesn't have to be necessarily right after earnings, though that could be the catalyst that actually triggers it. So we'll see. But ultimately, regardless of what happens here, I do think Tesla is definitely starting to look a little bit better than before, right? Even if we reject here, even if we draw down here, I do think that's overall still a, you know, perfectly fine move, perfectly bullish move. Honestly, it's a healthy thing to do as well. And then we'll see where it takes us. But ultimately, you know, my overall projection right now is something like this, right? Just roughly. Right, that's kind of what I personally foresee at the moment. And if we go lower, if we do break into new lows somehow, let's say moving into the next, you know, couple of months, let's say, you know, maybe February, maybe March, probably March if anything. And if we do go lower, let's say we come down all the way to 90 or something like that, the RSI, I'm like, unquestionably will not go lower. The RSI will most likely go somewhere like over here, and then we'll rally from there. And this will be like a new low on the stock itself. However, the RSI is setting up a beautiful looking bullish divergence. But, you know, all in all, Tesla does look like it needs to kind of chill a little bit. It does seem a little bit, starting to get a little overextended in certain situations, and it definitely is looking like it's gonna most likely have a drawdown relatively soon and play this out to the downside, this little ascending wedge, and that's kind of what I'm seeing. But all that being said and done, ladies and gentlemen, that's all I got for you guys in this video. Let me know what you think down below. Of course, as per usual, Tesla earnings, of course, coming out in just a half an hour, so that's exciting stuff. We'll see where it takes us. But again, if you're wondering what I'm personally doing right now, I have all my sold puts bought back a couple days ago, so that's completely gone. And right now, I am currently selling calls against my shares. And I still have a couple more to sell if we do end up actually getting that rally to 150, maybe even as high as 160, just in case. So I have something else to sell against, if we do get that extra rally. If we don't, fantastic, that's fine with me. I have my calls sold, I'm hedged against it, and I'm ready to go. I did take a pretty safe sold call approach. I'm not doing anything too aggressive, like, in the 150s or anything like that. I have like one, I think, in the 150s or two. The rest are like much higher. Just being very safe about it, just in case. But you never know with Tesla. But that's kind of what I'm doing. That's kind of what I'm seeing. So let me know. Tomorrow should be an interesting day. So thanks for watching, guys, and I'll see you then. Peace.